Thank you for joining me. I'm Alex, and I want to talk about Kohl's today. And Kohl's is a stock that I used to own for about 6 months or something. I bought this stock at 46.20, and I sold the stock at 45.92 or something like that. So, including the dividend I got, I actually made some money on this. And shockingly, this stock is in a kind of a different position right now, but more on that later. I think it's worth talking about why I would own a stock for half a year and not forever, as is my intent. And the reason for that is I didn't buy the stock because of strong fundamentals. I mainly bought the stock on fairly recent news at the time. And I realized later that I didn't really have the fundamentals in mind when I bought the stock, and I really did not fully believe in the stock and the long-term future, so I sold the stock. And basically, I sold the stock because I think it was a mistake in buying the stock, and I bought the stock because of short-term news, namely that they were going to handle returns for Amazon, which I thought would probably lead to a boost in sales because obviously, the point was to get people into the store to handle the Amazon returns and actually have them shop at Kohl's and spend money there. And I'm not sure if that worked out. And I'd be very interested to see if they think that that actually helped their sales or at least get people into the store. But now to the fundamentals, what they do obviously is retail. And it's mostly department store kind of thing, apparel, many other things. Current price is $17, so a third of the price that it was when I sold it and when I bought it, incidentally. That gives them a market cap of $2.7 billion. So obviously not a huge company and not a tiny company. They have many stores, but definitely not on the same level as, a Walmart or many others. Current dividend yield 14.29%, and again, I bought them in part because of the dividend, which was 5 point something percent at the time, and obviously the dividend hasn't changed. Payout ratio has also not changed, 61%, which is not terrible considering a dividend of 14%. Current revenue $20 billion, which is slightly down. Earnings $691 million, which is slightly down. Not that concerning, those numbers by themselves, and definitely no reason that they should be down 60%. So PE of under 4, and it's basically for 3.5-ish. Forward PE also under 4. The forward PE is actually slightly better than the PE, and 4 is just weird. 4 is weird. You would think that, again, when I bought them was about 12, you would think that a company doesn't really go into the low single digits on the PE pretty much ever. And you would think that if this whole situation blows over, or when it does, that assuming that Kohl's will survive this, which I strongly assume they will, things are going to pick back up, and even if they lose half of their profit, that would still give them a single-digit PE. So I really don't see why it's this low. Total assets $14.6 billion, slightly up. Total liabilities $9.1 billion. Also slightly up. Total stockholders' equity $5.5 billion, which is slightly down. Marginal, like under 1%. So overall, things have not changed, and the numbers don't justify a stock price drop of 60%. The main thing is that with the current situation and with people not really going out to buy stuff, and with Kohl's not really having a huge online presence, the issues are mainly related to the current situation and not related to whether or not they can run their stores well. So I would say that overall, if you're willing to gamble that the whole situation will resolve itself sooner or later, which it will, obviously, and Kohl's will make it through, which I strongly assume they will, with a stockholders' equity of twice of their market cap. You would think that they could borrow enough money and maybe even close some stores if they really had to, and I really don't think that they can take this much of a hit to where the current stock price is justified. Overall, I would say that they have enough on the balance sheet to probably borrow against to make it through a fairly long, I wouldn't say recession, but downturn. Even fairly pessimistic people are saying that this will all blow over pretty much in August at the latest. The numbers are going to be terrible if it takes that long. And I strongly hope that the current measures that are being taken will lead to a quick resolution, and we're talking 1 to 2 months-ish. If that happens, I think this is a pretty strong buy with a 14% dividend yield. I think that if you wanted to gamble on this, I think it would be a pretty good choice. Obviously, this is not a growth stock, but I think that as a speculative investment, it can be treated as such. For a dividend investor, I think that there's going to be some volatility. There's going to be some pain short term. But I think that if you buy it at the current price of $17, you get more than what you pay for. And I think it'll be a pretty decent stock, at least over the medium term. For a value investor, I think that everything looks good. And again, in all three of these scenarios, we assume that things will go back to normal sooner or later. If that happens, I think that for a value investor, the balance sheet looks pretty good. The PE looks amazing. The dividend looks amazing. And the rest of the numbers are definitely not bad. So I think that for a value investor, this is also a pretty good investment. For obvious reasons, I wouldn't really open a huge position in this. I would definitely put some money in it at the current price and see where it goes. So I'll probably pick up some shares because the current price is, in my opinion, definitely not justified, and I cannot see a scenario where it doesn't go back up sooner or later. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.